Good day, fellow investors. Just to answer a great, amazing comment from Nabi Rose. The question is here, what is greed and when is greed good or bad? Or what does it mean not to be greedy? So, excellent question. Nabi Rose says 25% in cash, and that's what I want to answer with this video. What is greed? So, from one perspective, we could say that greed is this.
The new law of evolution in corporate America seems to be survival of the unfittest. Well, in my book, you either do it right or you get eliminated. In the last 7 deals that I've been involved with, there were 2.5 million stockholders who have made a pre-tax profit of $12 billion. Thank you. I am not a destroyer of companies. I am a liberator of them. The point is, ladies and gentlemen, that greed, for lack of a better word, is good. Greed is right. Greed works. Greed clarifies, cuts through, and captures the essence of the evolutionary spirit. Greed in all of its forms. Greed for life, for money, for love, knowledge, has marked the upward surge of mankind, and greed, you mark my words, will not only save Teldar Paper, but that other malfunctioning corporation called the USA. Thank you very much.
Thanks, Gordon. Now, my natural answer to what greed is look from a perspective of risk-reward. The problem is that if you risk too much to get little, then I think people are greedy. Usually that's based on what happened in the past, and then people are high on what happened in the past. We have a mind, we are wired in a way that we expect that what happened in the past will repeat itself in the future. That's a very troubling issue when things change, because always in financial markets especially, things change. So greed might push people to do things that are not really appropriate for their financial life. Let me show you an example on the market. Ray Dalio and others said clearly, Warren Buffett also, if you look at his cash position, then you see, okay, something is not right there, because he has a huge pile of cash. Ray Dalio said that we can expect stock market returns to be negative over the next 10 years. Negative. So we know that history has shown us when the valuations are so high, when interest rates go up, when the next recession comes, we can expect negative stock market returns. And this is where the greed part comes in. People still expect the stock market to go higher, higher and higher. Give me another year. Give me another 2 years. I see a lot of comments, I don't think anything will happen in the next 18 months, next 16 months, next 2 years. And then you push that bar further, further and further. And that's what I call greed, because you're risking 30, 40, 50, 60% decline for that 10, 15, 20% higher in the next year, 2, 3 years. I don't know whether a recession will come in the next 6 months or in 3 years. I try to be invested in a way that if it comes, great. If it doesn't come, also even better. So an all-weather portfolio is the best situation now. The all-weather portfolio is, as Nabi Rose says it, fixed income, but that's something for a special video which will come Monday, I think. So I'll discuss fixed income and how that fits such a portfolio. Nevertheless, being greedy, I think the main message here is don't risk what you have and need for something that you don't need. So put it into perspective long term, okay, negative 10-year returns are the most probable outcome. I don't know whether it will be like that, but that is the most probable outcome. 50% down is also possible in the next 2-3 years. And then you have to ask yourself, okay, can I weather 50% down? Is it the risk I want to accept? And that's thinking about risk-reward is not being greedy. So that's my answer to Nabi Rose's question. I'm looking forward to your comments, what your answer is, because this is such an important question. Greed is good if it is good risk-reward balancing. Thank you for watching, looking forward to a comment, and I'll see you in the next video tomorrow about a cryptocurrency that I have found, which is the best cryptocurrencies I have found to date. So be sure to watch the video tomorrow, and the day after tomorrow about fixed income.